Hey guys, Luca here, thanks for jumping into another video. Today we're diving into the latest pause on tariffs and how it may affect the markets moving forward. If you're enjoying the content, don't forget to give this video a thumbs up and make sure to subscribe to the channel so you'll never miss out on future updates like this. Now let's get into it. So yesterday Trump has announced a 90-day pause on tariffs for further negotiations with countries, and the markets have seen a pretty substantial markets off of this news. The S&P 500 has jumped over 13% from the lows. Nasdaq has jumped over 15% and the IWM has jumped over 11%. So this has led to a pretty big bounce in the markets, but this was expected since we have been correcting for so long. So now what's going to happen moving forward? Now we see that the S&P 500 has bounced after testing a pretty important level. So we see that this level, the support line, has acted as a support back in 2020, back in 2022, and back in 2023, and all coincided with macro lows. So a lot of people were really scared after testing these levels, this exact support line that has led to all of the major rallies in the past, and so a relief bounce after this long downtrend was expected. So now what's going to happen moving forward is the question. Before we get overly bullish on the lower time frames, I still think we need to see a clear break above the lost support levels. So we see that in the past this has acted as a resistance range before the price eventually broke out. Then this acted as a support range, and then once we had this dump, it acted as an initial support range before it eventually dumped lower. So I think that on the lower time frames, what we'll need to see is a clear break above this range, then a reclaim as a support, then bounce on higher. Until then, I think that the best approach would be the cautious one. As in, we may expect another correction lower, whether this forms a higher low and eventually leads to a bounce on higher. But what I would wait for is a clear confirmation. Yesterday has marked the biggest jump in equity markets since WW2. Meaning that on the lower time frames, it's likely that we'll see another pullback followed by maybe another bounce higher if we're truly bullish right now. So this is something that I'll track moving forward on the major indices. And so now moving on to Bitcoin. Now moving to the Bitcoin chart, we find a very similar thing to what's currently happening on the S&P 500, in which we are testing a range that has acted as a support in the past, and we've seen the price bouncing each time it got tested, which eventually broke down, and now we're retesting these levels. We've seen a rejection a few days ago, which led to another dump lower, a retest of these lows, and now we're retesting it once again. And the price seems to be rejecting it. The price has reached the 0.618 level of this correction and has formed a deviation above it, and now it seems like we're pulling back. Considering that Bitcoin has been in a long downtrend, we see that Bitcoin has failed to form even a single higher high above the breakdown point. Each time we only formed lower highs, and the same applies now. In order to confirm that the trend has shifted and that we're no longer in a downtrend, we would need to see a break above the prior breakdown point, which is currently sitting at $88,600. So this would act as an extended break of structure. This is what I noted here. And so on the very low time frames, what I would like to see in order to confirm that Bitcoin is strong is maybe a pullback like this, followed by a bounce higher, reclaim this range as a support, and then bounce on higher to break above the prior breakdown point, confirm that the trend has shifted, make this a structural change, then go for a bigger correction as a wave 2, and then bounce on higher, confirming both a higher high above the breakdown point, this one, as well as a higher low above this low, confirming a structural shift. And I think that on the lower time frames, if Bitcoin fails to break above this resistance range, then we are at high risk of seeing another leg down into this high time frame demand range before eventually we'll see our long awaited reversal. So this is something I'll track moving forward. And once again, I'm not saying that this leg down will happen or that it needs to happen. I think that on a long-term perspective, we've come a long way from the highs to here. And this is also why I've been so bullish on the high time frames, as I'm expecting a strong rally ahead. But being bullish doesn't mean to be reckless. And especially after we've seen such a long downtrend, until circumstances change and until there is a confirmation that the circumstances have changed, like we've discussed earlier, as this reclaim of a support, then this extended break of structure confirmation, confirming that the trend has shifted and that we're no longer in the same lower high type of scenario like we've seen throughout all of these months, then I think the best approach is the cautious one. And until a system fails me, like I've done over the last couple of months, in which Bitcoin has tested resistance ranges, then it dumped lower. Then it once again tested resistance ranges, then it dumped lower. I caught most of these dumps just because I stick to my system and I hedged myself right when Bitcoin was approaching these resistance ranges. And until the system fails me, I think it remains the best approach moving forward. So this is something I'll track in the coming days, whether Bitcoin forms this series of marginal higher lows and forms something very similar to what we've seen here, in which there are higher lows, higher highs forming on the lower time frames, but this eventually just leads to another liquidation cascade. Like we've discussed over the last couple of days, this series of untapped lows eventually leads to liquidation cascades. This is something we've seen in the past once again, and this is something I used in most of my analysis to predict a future dump lower. So if Bitcoin will form this series of higher highs and higher lows on the lower time frames and then struggles to break above the prior breakdown point, even if people will be really bullish here, even if people will be extremely hyped that Bitcoin is performing well once again, we'll still need to pay attention to a similar series of untapped lows that develops on the lower time frames that eventually leads to the next correction lower. And this is the same thing we've seen over the last couple of months. This is the reality that we have to face and that we need to adapt to. Even if we're bullish on the long term, even if I am bullish on the long run, on the lower time frames, once again, until things change for Bitcoin, until there is a clear confirmation that things have indeed changed with the price action, with certain confluences that will develop and that we'll cover in just a few minutes and so forth, then I think that we'll have the same outcome once again, in which Bitcoin continues its downtrend. Bitcoin is still in a downtrend until it's not in a downtrend anymore. Now, it's time for some good news. I'm really cautious moving forward, especially if we continue to fail to break above this resistance range. What I like is that the market structure has started to flip to the more impulsive side, in which we are no longer seeing these slow impulses up, then a small dump lower, then a small impulse up, and so forth. That eventually leads to the next liquidation cascade. But it seems like this is more of an impulsive market structure, in which the price has sudden corrections and then sudden impulses. And if we'll see an ABC correction like this, and then a big impulse up above this prior support range, then reclaim it as a support range with another ABC, and then bounce on higher, I think this would be really good, as it would confirm that we're no longer in this downtrend, that the market structure has flipped, and that we're no longer seeing corrective waves on the lower time frames. So there's a difference between impulsive waves and corrective waves. We've seen this as a corrective wave, in which the price slowly chops up, slowly builds these liquidity levels to the downside, and eventually all of this gets triggered by some news or some event that leads to this liquidation cascade. And I've explained this thesis quite a lot over the last couple of days of why it happens and why these liquidation cascades occur in the first place. And we've seen a very similar thing happening once again in mid-February, in which we had this very frustrating chop of about half a month, so about 2 or 3 weeks, which eventually led to this major dump lower. So on the lower time frames, it's a good thing that we're starting to see signs of an impulsive market structure, but still we need to be cautious, especially that we're testing a resistance range. And if we continue to form a higher low here and then the bounce on higher, I think things will look great for Bitcoin once again. Now moving to the Velo Data, this is something I track quite frequently, especially on the lower time frames. We've seen last night when Trump announced the tariff pause, funding rates jumped to 0.02 and open interest jumped as well alongside with the price. And I think this is due to the fact that everybody rushed in to longs and longs piled, and this has led to this major spike in funding rates, signaling that everybody got really bullish once again on the short term. So after capitulating here, after extreme fear and uncertainty, people have flipped completely bullish, which is a sign of how volatile market sentiment really is and why it's good to have an objective analysis over the markets, not follow the narratives that change on a daily basis. So after that, we've seen the open interest slowly bleeding back down alongside with the funding rates, signaling that late longs are getting flushed. And once again, if we'll form an ABC correction like this and then bounce on higher, this would also confirm a higher low as well as the start of an impulsive market structure in which the price has these aggressive impulses up, then a sharp correction down, an ABC to trigger this low and leave no liquidity behind, and then bounce on higher. This is the definition of an impulsive market structure. So I think that using open interest and funding rates in this analysis is very useful right here. With that being said, this has been the video for today. Moving forward, I'll continue tracking the market structure and confluences that will develop and keep you guys updated with my latest perspectives as always. Stay tuned, and if you've enjoyed today's video, don't forget to give it a thumbs up and make sure to subscribe to the channel so you never miss out on future updates like this. Thank you all for watching, and I'll see you guys in the next one.